Equity markets officially open for trade there, packed podium, and we do see fractional gains across the board. Several NYSE listed companies reporting better than expected results this morning. That includes Disney, Uber, and yes, McDonald's. And stocks certainly catching a reprieve today. Joining me now to talk more about this market is Michael Landsberg, CIO at Landsberg Bennett Private Wealth Management. Thank you so much for joining, sir, this morning from Punta Gorda, Florida. What do you make of the market at these levels?
Chris, I think we've expected the earnings to decelerate from last quarter to this quarter, but we were more optimistic than I think the rest of Wall Street. So I think what you're seeing is you're seeing companies beat because I think people have lowered the bar too low. And I think this sets up for a pretty good quarter of earnings where things are going to outperform and beat expectations.
Yeah, certainly we see those NYSE listed stocks doing well this morning, as I mentioned, after better than expected results. I want to ask you how trade factors into all of this. We saw the August 1st deadline. Some of those levies ramped up to as high as 41%, yet trade deals are simultaneously getting done. How does that factor in, and where do we stand?
I think a lot of the trade, tariff talk is basically whipping this market around. I think at the end of the day, fundamentals drive stock price returns. So we focus on the earnings because those are actually legitimately going to happen. The problem with some of these tariffs is, we're moving the goalposts around. Really tough to trade those, and it becomes more of a trader's market that way. We're looking at the earnings. Like I said, I think people discounted the effective trade too much on this quarter's earnings. I think the estimates are too low, and they're outperforming not just NYSE, S&P 500, but also when we look at NASDAQ and even small cap stocks are going to really have good acceleration in year over year growth, I think because the bar was too low.
Yeah, and the Fed, of course, is a factor in all of this. And we had seen what was a disappointing jobs report on Friday, not just for the month of July, but drastic downward revisions. In fact, just job gains in the tens of thousands. That is for both June and May. Where does that leave the Fed, of course, going into Jackson Hole at the end of the month and its next planned rate decision in September?
Yeah, I think the Fed really is kind of in a tough spot. I don't know if if it was a different president and there was not as much push on lowering rates, if we'd be having these discussions, simply because unemployment, other than the last report or so, has been pretty solid. Unemployment's around 4%. Inflation's kind of in check at 2.5, 2.6, somewhere in that area. I just don't know if you're going to see them do much. I think September is probably up in the air. I do think they're going to probably end up cutting before the end of the year. But I look at kind of what rate cuts do. I mean, stocks are near all-time highs. Risk assets are near kind of back in play. You're seeing IPOs, meme stocks. We don't need any more animal spirits to come back in the market with a rate cut or 2 or 3. So I think they're going to be in a wait and see. I think they're going to be on the cautious side. But I think obviously, language is important. I think what they're going to come out of with Jackson Hole is going to be really framed. For the first time in 30 years, you saw dissent on the FOMC committee. Saw 2 people wanted to actually cut rates. So I think we're heading in that direction. I just don't think we get there in September.
Yeah, it has been certainly a step-by-step process in this rate path, that's for sure. Michael, amid this environment, you're seeing better than expected earnings, corporate America hanging in there. Which sectors do you think could be poised to outperform?
I think what's interesting to us right now, for like 3 years, I've been hearing about how great small caps were. We were anti small caps for a while. Everybody on the street seemed to be positive. Right now, small caps seeing accelerating growth year over year in earnings, but it's one of the most negative positions I've seen on the street in years. I mean, very, very short positions in looking at futures on the small cap. I think they're attractive. I think you're starting to see some earnings growth, and basically the sentiment is so negative on it. I think they're attractive. I think international is attractive. I think you want to look at the under-owned areas. Also, S&P 500 versus NASDAQ. We like NASDAQ names, but boy, everybody owns them. Maybe you want to broaden your exposure a bit. I think it can go outside of kind of the traditional, whether it's Mag 7 or whether it's traditional mega caps, to look for some areas to broaden your exposure.
What about financials? Of course, deregulation is a major factor that the president campaigned on. We've seen financials be volatile amid the volatility that we've seen in general this year. But is that a sector that you think could be primed well if we do see a further recovery here in stocks?
Absolutely. One of the stocks that I focused on when I sent you some notes was Interactive Brokers. I think actually financials will do well. In particular, I think they're a company that's really poised to continue to do well as trading increases. They're expanding their international footprint. A high margin business. I mean, they're in the business of basically making money, and they do a really good job at that. Their technology is first rate. So I think there's some areas in financials that make money. In particular, we really like that one because it's levered more to trading. And we're seeing more and more trading. I mean, the volume that you see on the NYSE in these markets now is historic. It's a lot of volume, and I think companies like that are poised to take advantage of that, I think, are in a great spot. And deregulation is going to help financial services. It's a very regulated business. Some would argue overregulated. And if you could free up some of that capital to not spend on compliance, I think it could be a positive for that entire sector.
Michael Landsberg, CIO at Landsberg Bennett Private Wealth Management. Thank you so much for joining us this morning down there in Florida.
Thanks, Kristen.